Hey everybody, Jerome Maldonado, and welcome, ladies and gentlemen, to Wednesday's Real Talk on Real Estate. Today we have a very interesting story. The China Evergrande is in big financial heat right now, and the question is this China's Lehman Brothers moment that we saw back in 2008 when Lehman Brothers collapsed? Is this going to be similar to it? So I don't watch the news. If you guys have watched the news, you guys have probably heard this trending and have seen this trending. Since I don't watch it, I see it on my phone and I get my stock reports. So I've kind of watched this. It's become interesting to me to watch this, and it's ironic that this is coming to the table now because we've been watching this since like March, and it wasn't alarming in regards to like a worldwide or a countrywide issue until just recently, now that the media has gotten a hold of it. And so now it's really become an issue for China and for Evergrande. And, you know, one of the big things is they were formerly known as Hengda, and they were formed in 1997. And the company was started by a gentleman named Hugh Ka-Yan. And he last year, Forbes magazine had named him the #3 wealthiest person in China. And then by December of last year, he had dropped to the 10th wealthiest person in China. And, you know, he has a resume, the company does now. Evergrande has a resume that's a mile long. I mean, these guys, what they specialize in, if you guys don't know, is real estate, which is what we talk about. And they sell apartments to upper and middle income property buyers. So that's Class A and Class B property buyers, and probably a little bit of Class C property buyers. And if you guys don't know what Class A, B, and C in real estate is, the grading scale in real estate is exactly like it is in school. So one of the big things is you get an A, it's, you know, the best grade you can get in traditional school, right? B is good, but it's a lot not quite as new. And C being something that is still leasable but older, but it still passes the sniff test, so to say. And so that's what they specialize in. Now, they've completed over 1,300 commercial and residential projects and infrastructure projects. So what are those? Commercial projects being commercial development projects or commercial purchases of multifamily. They have expanded their investment portfolio into some retail, some residential development as far as subdivisions and stuff. In fact, right now, they have over 1.5 million deposits currently on new homes that are still yet to be built. And so they're sitting back going, okay, we have to build 1.5 million homes, and we can't even build them yet because of the financial status that they're in. And then they've expanded. You know, the company is accounting for well over 200,000 employees. So it's a big company, and they've expanded their investments, right? As you grow and you start investing and you start seeing profits come in, you know, in spite of Hugh Ka-Yan becoming a multi-billionaire from the real estate sector, he's expanded. The company has expanded into food, into insurance, into TV, into film, into leisure. They have a professional football team that they own, the FC Football Club. So it's not a team, but it's the actual club, which was formerly known as the Evergrande Football Club in China. Now, the question is, are they going to make it through this, or is it going to collapse? Now, a couple scenarios here. If it collapses and this goes down, this will be something that China hasn't seen in many, many years as far as economic devastation. This company accounts for over 2% of all of China's economy. And so how does that affect China? Okay, now they're saying that Beijing will not allow the company to go down, you know, but as of right now, the politicians in China are sitting back saying, we have no bailout money for you. And so they're currently claiming that there's no bailout. And so what is that going to do to the overall country? And how does that affect us here in the United States? And so, you know, right now, the big question is what type of influence our U.S. banks have on the Evergrande and to what magnitude? And we don't know that yet. And so we're optimistic that that it won't affect us, and we're optimistic that Beijing, in what they're quoting, won't happen because, you know, and all in all, we're starting to become an international commerce. And so if we sit back and we let China, 2% of China's economy go into financial devastation, what you got to understand is it's not only just 2% of China's economics. The number one economic output for China is real estate, is a sector in its own. 29% of China's economy revolves around its economic growth revolves around real estate, and so it's one of the largest contributing factors. In fact, they had population control that they were trying to implement in China. They've been implementing for years, but they've had such an astronomical amount of population growth over the last couple decades that this is what's allowed this company that started in only 1997 to grow to such a magnitude, being China's second largest developer in the entire country. Okay, so this is China's number 2 developer, second largest in the entire company, in the entire country. And so you sit back, as they hold 2% of the debt. They're currently right now over $305 billion in net debt right now. $305 billion in net debt. So that doesn't mean that they have all their asset holdings and all the debt there. They do have a little bit of liquidity, or did, and now that they're still over $305 billion in debt, and $7.4 billion of that is contributed by bonds that are owed and are coming due to investors by 2022. So what they're saying is that a lot of these bond investors are going to take about a 75% cut reduction in what their bond holdings are because of everything that's happening right now. Not only that, they've been downgraded. They've been downgraded by 2 credit rating in Hong Kong, and they've been halted in Shanghai. And I know that the Dow has been affected by it, and so in the NASDAQ, and you know, all of our major U.S. Wall Street companies have also downgraded it, and so it's being affected worldwide. And so the big question is, how does this affect our banks, and will it? And so we sit back, and right now the U.S. is going through its own economic battles. You know, not major ones. We think we'll get through it, but I know that the U.S. Treasuries is encouraging lawmakers to go in and vote to increase the federal debt limit. If they don't, then we can see our own financial crisis happening right here in the United States. And if we see something like that happen, and we know we have, to some degree, like the Democrats are sitting back going, come on, Republicans, vote for this. And the Republicans have been fighting the Democrats since Trump was in office, and these guys have been bickering back and forth at each other. And it's really a communicative thing that once the Republicans or the Democrats take the House, the Senate, or the presidency, then they have to work together to do what's in the betterment of the country, right? And so, you know, I believe that they're going to increase the federal debt limits. You know, I think they have to. They've been pumping so much money into the economy, and we've seen such appreciation in stuff that they have to do it. Now, will they do it? I don't know. You know, it's up to vote. I don't have a crystal ball. I'm just giving my speculations. When I say they have to do it, that's me going, oh my God, you know, something has to be done. So I'm speculating that they'll do it. So nonetheless, you know, we sit back and we look at this from a real estate perspective, and how does this happen, right? Like, how does this happen? And the way I speculate that this happens is that people, like anybody doing extremely well, they get wasteful. You know, we have our own set of companies, and we had Lehman Brothers, we had AGS that went under, and then we had you know, so we have big companies like BlackRock that are funded by the feds. Imagine like if a company like BlackRock, which is our Federal Reserve, is funding all these houses. Imagine this is like the equivalent of like BlackRock going down, right? And so most people know BlackRock is one of the largest REITs in the United States. And so imagine if BlackRock, if their expenses and debt superseded their cash flow. And that's the way these companies work. So people sit back and they value these companies based on their asset holdings, and they sit back and go, okay, how in the world can a company like BlackRock go in and overpay for single family residential homes? That's one of the big questions, right? And we've talked about this before. And so you sit back and you think about a company like BlackRock going in and overpaying for single family homes. Now they're taking these homes and they're utilizing them for single family home rental properties. And so they're trying to really become one of the largest rental companies in the entire world. And so what happens when they do that is anytime that there's a limited supply and there's an increased demand in a company like BlackRock that has that much cash ability and getting funded by our Federal Reserve, now they have the ability to come in and annihilate a market sector, right? Which it decreases our supply, increases the demand for single family homes. And so we're kind of seeing this in the United States. So it's raising the prices of single family homes. And the model that BlackRock utilizes is they sit back and say, okay, what is our cash flow? What can give us the best returns on our investment so that we can show increased cash flow to our investors and pay out dividends or pay out increased premiums to our shareholders? And so they're looking for the cash flow potential. And right now, single family dwellings, apartments, there's been an increase of rent premiums nationwide, worldwide. And so they're sitting back, and that is the business model that BlackRock is leveraged on. So what happens if interest rates rise, the housing market changes, and things collapse? Well, we're yet to see what happens there, right? We're hopeful to see. Okay, when I say hopeful, I'm very, very rarely hopeful, because here's what happens. A mentor of mine years ago, he said, Jerome, if you spit in one hand, and you hope in another, you're going to land up with a handful of spit and an empty hand of hope. Okay, both being absolutely worthless. And so you don't typically function on hope. But when you're sitting back and the financial sectors are outside of your control like this, I remember 2008 like it was yesterday, and I remember sitting back and I was hopeful at that time, because I told my wife for the first time ever in my entire life, December of 2008, moving into January of 2009, I sat on my couch. I sat on the couch thinking. Then I got on the computer and I started breaking down numbers. And one of the funny things is that wasn't so funny at the time is how alarming the numbers became to me when I really put them into true perspective and I broke them down. And after the holidays had come and gone, and the phones typically take a little bit of time to start to escalate a little bit and to start to ring again into the season on the residential sector, even on a commercial sector, because everybody's in la land, right, for the holidays. The phones never started ringing again for we're moving into February now. Now February is turning into getting closer to March, and I was sitting back going, okay, this is out of my control. I remember walking to Home Depot thinking, I wish I had something to buy. And I was looking around Home Depot thinking, okay, what can I was just trying to burn some time thinking of anything I can buy to put towards a project. And it was the first time that I felt vulnerable to the economics that were outside of my control. Because if your phones aren't ringing, there's not a market for anybody, not just you, but for anybody. When Lehman Brothers collapsed, it was crazy. Commercial buildings had an $8 million office condo project going on. I had a multi-million-dollar retail center happening, and the banks just halted it. And so for investors, for those of you guys who are watching this, can this affect us? Well, if U.S. banks are indebted to the Evergrande and to the Chinese Evergrande, and we find out that they're more indebted than we think, it could raise interest rates, one. It can also decrease their lending power to other investors and stuff. So hence, it can have a worldwide effect. And so we're yet to see what happens. So optimistically speaking, let's see if Beijing comes in and they come in to help out. They're in Shenzhen, which is right outside of Hong Kong, and we'll see if Hong Kong comes in and helps out, because it's going to first be China, then Hong Kong, and then it's going to start to escalate worldwide. And I have a feeling that we'll feel the ripple effects of this if they go down. And I think our U.S. banking and Federal Reserve and all of them, because the Federal Reserve is ran by our central banks, and so I have a feeling that all of them will be affected in regards to that. So we're yet to see. Now, one of the big things for investors as you guys look at this stuff, I wouldn't get alarmed with this yet, because I don't think that the U.S. is going to get affected like China will be affected. China's going to get affected, hands down, worse than anybody if it goes down. There's 2% of their economy, like I said, and their banks. This is going to be like a Lehman the Lehman Brother equivalent financial crisis that the U.S. had tackled. Now, remember, if you remember, back in 2008, moving into 2009, it wasn't just the U.S. that got affected by our collapse. Once the Lehman Brothers collapsed, then it was a trickle effect worldwide. Europe got affected by it. We got affected. China got affected by it. New Zealand got affected by it. We got affected by it in multiple ways. And it escalated worldwide. And so I think the same ripple effect will happen if we see this perlade into China. And if the Chinese Evergrande does go down, I think we are going to see some ripple effect to it for sure. Nonetheless, do we have any questions on there, Daniel, before we wrap this stuff up? I more than anything just want to get these guys and gals some information on what's happening in China, the effects to us, and what the possibilities are worldwide. Any questions on there?
Yeah, we're good.
So understand, guys, the China Evergrande, they are doing business in over 280 cities. So this isn't just something like, hey, this is going to happen in China. Good luck, China. Good riddance, China. Good luck, China. Hope you guys get through this. This will be a test for the Chinese economy because, I'll tell you that it's a big number. We'll see if the overall Chinese economy can withstand this devastation if they happen to go down. And the people that have the most to lose are stockholders. And so there's a lot of shareholders in the company that are sitting back with their fingers crossed. They're scared. They're wondering what's happening. There's a lot of people with a lot of money invested with these guys. And so just like a small investor, ladies and gentlemen, you got to do your homework. When you get frivolous with your money and money becomes expandable and you just start investing in things that don't make sense, this is what can happen. And there's part of what probably happened is the corona, right? Is the pandemic. Everything that's happened the last couple of years, and now it's snowballing. And so, ladies and gentlemen, we'll see what the ripple effect has to show its true colors. But if you like the information, this stuff takes time to sit down, research, go through facts and details to make sure that we're getting you guys good information. Then give us a thumbs up. Let us know that you appreciate the content. Subscribe to our YouTube channel for more content just like this. Everything that we do revolves around passive income, real estate, buying land, building houses, generating large capital, and then moving that into cash flowing assets, multifamily, multi-unit real estate, warehouse, industrial space. And ladies and gentlemen, we're a small player in a big pond, in a big ocean with players like the old Henga and Evergrande. But I'll tell you that the same efforts that go into our day-to-day business are what it took to develop this company. And ladies and gentlemen, the due diligence that we do every day is super important. So don't forget your underwriting. You have a little bit of success, you work with us. Don't forget where you started. Don't forget what got you there. Because the second you forget what got you there, you're on your way back, ladies and gentlemen. Ladies and gentlemen, real talk on real estate. We're praying and hoping for the best in the betterment of the Chinese economy and for our fellow entrepreneurs and fellow real estate professionals. God bless you and have a great day.